Greetings and thank you for joining us at futuremoneytrends.com. I have a special guest for us today. Many of you have probably seen his videos that are listening to this, his interviews, as well as even possibly read his book. Our guest today is an investor, banker, hedge fund manager, and author of Planet Ponzi. And we'll definitely make sure we have his website and links available. It's a site you're going to want to go to and spend a few hours, listen to his interviews, and certainly pick up his book. Mitch Feierstein, thank you so much for joining us, sir.
Yeah, thanks for having me here today.
Well, sir, your research is without a doubt, it's as in-depth as anybody can get and go into this to fully understand what's going on. But also you definitely have a charisma and to being able to teach people. So when I listen to your interviews, anybody can listen to you, anybody can read your book, and I think they'll definitely come away from that really feel like they've got it, the whole picture, whether they're into finance or not. So I'd like to start off with just a brief introduction of Planet Ponzi, and even to the point to when did you have this discovery or aha moment where you're going along as an investor, hedge fund manager, you're like, you know what, something is terribly off here.
Well, thanks for the praise. I don't know if I'm worth it, but I have been throughout my 36 years in the markets on Wall Street and in the city of London pretty timely with a lot of my market calls. Nobody makes money all the time. Sometimes you lose, sometimes you win. You just have to make sure that your winners offset your losers by a wide margin. Otherwise, you're out of the business pretty quickly. As far as recognition, I was fairly bullish up until about 2005, 2006, end of 2006. And at that point, I was working for one of the biggest hedge funds in Europe, managing a fairly large portion of the risk portfolio to hedge off any exposures that we may have. And I didn't like the way things were shaping up. I had a lot of interaction with the governments, and I don't think that they kind of get the picture. So we were pretty fortunate, with the hedging book, and we went short a lot of the major indices in Europe and in the United States. So we were probably pretty short when that happened, and I had cleared out a lot of the assets that I had owned in my book. So we were pretty successful during the beginning of that crisis because I saw it coming before it happened that time. But, I also suggested to the powers to be at that point that I had interfaced with that what's necessary to be done is instead of bailing these banks out, you need to let the banks fail like they did with the savings and loan institutions back in the 80s when I first started out in the markets. And 250 or 350 bankers went to jail. It's a similar type of scenario that you need with this. And I said, if you don't do that, I'm going to write a book and tell everybody the real story about the credit crisis and what happened. Because what's going to happen is if you just pretend, extend, pray, and delay, the next crash is going to be much worse than this crash. In fact, it's going to be worse than 1929, 2007, 2008 combined, and it's going to be a financial disaster bigger than the world has ever seen or even envisioned. It could take down the entire global financial system. And, this is based upon too much debt, too much credit, and too much leverage. You reach a point in time where you reach the end of the road, and I think this Ponzi scheme has approached its final death rattle. Now, the descriptor, Planet Ponzi, I think is the best descriptor for what every government around the world is doing by issuing quantums of debt that are just unfathomable. People need to think about this. The amount of debt, that's out there right now is grotesque. For example, Deutsche Bank is an insolvent German financial institution with $70 trillion of derivatives on their books. That's on their books. It's not including off their books. Now, to give you the scope, scale, and magnitude of $70 trillion, that is more than global gross domestic product. So all the goods and services produced around the world with no consumption, Deutsche Bank's derivatives book is larger. So think how shocking that is. That's not only too big to fail. It's too big to fail, too big to bail, And in my world, that's too big to exist. The regulators have fallen down. They haven't been doing their jobs. They're looking to move from the regulation side to the bank side to show the financial institutions how to skirt these regulations. But, at the end of the day, people are going to have to realize that banks like Deutsche Bank and the sovereigns, such as Italy, who have issued massive amounts of debt and can never repay that once interest rates start going up, not because of the European Central Bank manipulation to keep them down. Once they start going up, countries like Italy, whose gross domestic product for the past 15 years, out of the 160 countries in the world, they rate about number 158. Only worse gross domestic products were in Haiti and Zimbabwe. I mean, they'll be insolvent because they won't be able to, with declining revenues, they won't be able to even service the interest on their debt. So that's the background to the problem. And now all we've done since the original crisis is make the piles of debt incredibly higher. So, they haven't remedied the problem at all. They haven't really deleveraged any of the banks in Europe. All that's happened is the central bank has come in and purchased bonds issued by corporates. So basically they're picking winners and losers. The Swiss National Bank owns over $100 billion of Apple shares. So, central banks are buying stocks and buying into companies. That doesn't mean things are better, because they're not. If you look at the manufacturing numbers, and you look at the unemployment numbers, you have in parts of Spain, you have 7 out of 10 youth, the youth under 25 age group. 7 out of 10 people don't have a job. So you disenfranchise the whole generation, future generations of young people, by creating this debt and just extending it.
Mitch, if we would have had this interview in 2013 or 2014 or 15 and 16 and just, 6 months from now in 2017, it's going to be essentially the same story that they've kicked the can. Things are getting worse. They're making things worse. But, I think, what is the most likely outcome here? Can they, you've been doing this for over 3 decades. You're well researched. You know the right people in hedge funds, banking community. How long can they keep doing this? I mean, are we going to be having an interview like this in 2025?
No, I don't think that's going to happen, because you notice that the quantitative easing now is starting to have limited effect. Like, the Fed is politically motivated. I mean, Bill Clinton hired Janet Yellen 14 years ago, and Brainerd is another one of the crew. She's given political contributions to elect Hillary Clinton. So the reason why the Fed didn't tighten this time, a measly 25 basis points, is politically motivated because of the presidential election. So if you look, the Dow gained maybe 250 points this time. Now, normally on the Fed, it would probably go up 500 points, but you're not seeing a strong follow-through. And I think, no matter what the Fed does, the market is becoming deaf to what they're doing and starting to ignore them. I mean, if you look at what's happened since the credit crisis, I mean, student loans, you've got $1.4 trillion in debt that can never be repaid, right? So since I went to college and right now, tuition in a U.S. university and college has gone up about 1,400%. Now, real wages haven't gone up in the same manner. In fact, real wages, when you inflation adjust, are lower. So you get a situation where you get somebody who has to pay to go to college coming out of university now with $300,000 in debt, a gigantic amount of debt. The wages haven't gone up from, when I was there. So that's an enormous payback that they have to be encumbered with just getting out of school. Plus, real estate prices are at historic highs. So if they're going to rent a place, the rent is astronomical. I mean, when I got out of school, you could buy an apartment in Manhattan, a 2-bedroom apartment. The price of those now is between 10 and 20 times higher. So, for example, if you could buy it for $300,000, now it's at least $3 to $6 million. But so, my point here is there's got to be a correlation in housing to wages. And while the Fed, these wizards and warlocks and the magical people who run the Federal Reserve in their ivory tower, down from their ivory towers of academia, they've created grotesque asset bubbles in stocks, bonds, and property. And it's about to hit a wall, because you can't keep winding a rubber band or elastic band tighter and tighter and tighter, because people don't have the money to pay for this. Before you could prolong it, and they've done this for 30 years or 40 years, but we've approached the end of this cycle.
Sure. Do you think some of the bigger signs that people can look to, who, let's say they don't follow the economy well, but they do know something is off, the middle class, obviously that you're seeing big moves in elections in the last year to 2 years. The U.S. now, sadly, we're having riots like every other week, like every 3 weeks, max. There's riots. There's people burning things down, and whatever the scapegoat is, it's a cop or a racial thing. But the fact of the matter is, I mean, we've got thousands of people coming out, and they're like an angry mob. It seems that this kicking the can has worked out well for people who have some assets, who have some money, but for the middle class, they're certainly hurting, and for the poor, it seems like they've just been totally screwed on this one. Are these some systemic signs that we're seeing with the populace?
I think what you could do is you could summarize this by the United States Federal Reserve behind Janet Yellen and Ben Bernanke's policy has screwed the 3 S's: savers, seniors, and students. So they have no future. I mean, if you look at what's happened, here's what's skyrocketed. Money printing has skyrocketed. The Fed's balance sheet has gone from up to, it's approaching $5 trillion, and they can never sell those securities. So no matter what they tell you, you can never taper a Ponzi scheme. Just remember that. Food stamp recipients are at a historic all-time high. They've gone up 100% from prior highs. Federal debt, all-time high. Healthcare costs, all-time high. Black inequality, all-time high. Wealth inequality, all-time high. Now, the lows, labor force participation rate, pretty much we're at 30-year lows. Median family incomes, 30-year lows. When you inflation adjust home ownership, we're probably at 40 or 50-year lows. So how long can it go on? Not much longer. I mean, because you've reached a real turning point here. I mean, they can massage things, and they have, but we've gotten to a point where these bubbles are so grotesque, and this current election illustrates, the presidential election between Donald Trump and Hillary Clinton illustrates some winners and losers. Who are the winners and who are the losers? Okay, so Hillary Clinton is the status quo. All the banks are backing Hillary Clinton because she won't topple the apple cart. Donald Trump is the unknown. He could topple the apple cart. However, what has this shown us? This has uncovered a torrent of lying traditional media. And good folks like yourself, RT, and the internet have provided a forum that never existed before for people to get alternative viewpoints, and allowing people to accumulate a toolbox to get their own information and put together their own scenarios and figure out whether this is reasonable or what the mainstream media is reasonable, or whether there could be another scenario going on here. Because people realize, and they feel in their heart of hearts, that what they're reading in the New York Times in Paul Krugman's column, the Keynesian Kool-Aid pushing Krugman, is probably not necessarily accurate, and it's more politically motivated to move forward Hillary Clinton's agenda. I mean, that is, the paper over the years has just become an editorial platform to push political agendas forward, period. So you're not really getting news, you're getting editorial content. So this has come out in this election as a huge loser. The Democrats have spent are going to end up spending billions of dollars on this election. The leaks are significant that came out because they show how that the campaign of Hillary Clinton, they disenfranchised the Bernie Sanders voters by not counting their votes and actually rigging that primary to ensure a coronation happens for Hillary in 2017. Now, that's simply not democracy, right? So this is a twist, and spending all that unnecessary money, if you look at the other side, Trump hasn't spent a fraction of that. So this tells us that what we need is drastic campaign finance reform. You can't have the George Soroses of the world controlling every aspect of a political election and of government operation. But I think basically what's happened is Washington has turned into a pay-to-play cesspool of corruption where the Department of Justice and the FBI fail to prosecute anybody who's connected or in a position to pay them back by giving them a promotion or job security.
Yeah, no, certainly pay to play. We've seen things come out with the Clinton Foundation. Everybody's aware of media bias, but what happened after the Democrat National Convention with the media, the way it went against Trump was just incredible. I mean, I've never seen anything like it. I remember some guy climbed a Trump Tower and was arrested, and the title of the headline was "Trump Arrested." And then, of course, you click on the article, and it's like Trump climber arrested. But I mean, it was just, I never seen such a concentrated effort with the corporate media to really target the support of a single candidate. Well, hey, moving on from politics, moving on to more of the individual. So let's say they buy your book, they read the book, they're on your website, they understand there's some problems, and now they want to do something. What are some individual things we can take actions to, for our own family and to better prepare our own family for a potentially systemic crisis worldwide in the financial markets?
Look, my book, you don't make money selling books. That book was a big loser for me because I spent 2 years of my time writing that book. The point of my book was to explain to everybody, and it might not be recognized until after the next crisis hits, how we got into this mess. There are three main tenets to how we got into this mess. Number one. Number two, what happens next? And number three, what you need to do to protect yourself. So that's kind of the ending of the book. But I'll give you an idea of what I think. And just because it's what I think doesn't mean that it's going to happen. I've been right more than I've been wrong. But, you can be wrong. I could be wrong. But, anything's possible. My view of the world is that you need to diversify your asset base. I mean, we're in unprecedented times where the Federal Reserve, the Bank of Japan, the Swiss bank, who have been meddling in the markets by buying shares and buying bonds, European Central Bank, there's $16 trillion in negative interest rate bonds. If people who are listening don't know what that means, it means you give a government money and they pay you back less than you gave them after a 10-year period or a 30-year period or a 20-year period. So that's assuming that there's no risk in lending to them of them going bankrupt or their currency collapsing, which is absolute lunacy. Okay? So basically, my view on that is they've never had negative interest rates in 5,000 or 6,000 years, and there's a reason for that. The reason for that is, in my world, if you are paying a negative interest rate, all you're doing is defaulting. You're defaulting on your debt because you're taking money and you're not paying back the money that you borrowed to begin with. So I don't care how they want to window dress it. It's a default. Okay, so if it's minus 5%, minus 10%, minus 20%, what's the difference between that and the default? You tell me, Daniel.
No, I'm so glad you just said that. I've never heard somebody bring that up at all. And that you're right. If I loan somebody money and they don't pay me back all my money, they've defaulted.
Right. But so I don't know how it's like putting lipstick on a pig. No matter how much lipstick you put on a pig, it will never be a supermodel. Same thing with what Ken Rogoff is trying to push in his new book. That book is touting negative interest rates and getting rid of the $100 bill so the government can seize your money and he can get the Treasury Secretary job or the Fed job from Hillary Clinton. That's exactly what the direction that these guys want to push us into. You've got a cadre of these Keynesian economic theorists from their ivory towers, Larry Summers, Paul Krugman, Ken Rogoff, all of them. Not one of them has ever worked a real job in their lives. They don't know what it's like for middle-class families. And all they want to do is keep the status quo for the politicians and get a powerful job in Washington, period. And, this is going to negatively impact the middle class. Now, debt, let's think about what debt is for a minute. Okay, debt is it's future consumption brought forward, right?
Yep.
So we've already exhausted future consumption for probably the next 3 generations with the amount of debt. I mean, think about what China's done. China has printed willy-nilly probably close to $38 trillion in the past 6 years. With the GDP, the fake GDP that they claim is what, 9 trillion? Who knows what it really is? 4 trillion, 5 trillion? But there are going to be bank failures in China. I don't know how they're going to window dress it, but that's the problem. So there's all the sovereign debt in Europe. So what people need to do is figure out what their exposures are and try to mitigate their exposures and have a balanced portfolio with the realization that there are going to be selective defaults and sovereign issues, and realize that, a company like Facebook, figure out what their valuation is. Facebook is trading, if you figure out what their valuation is relative to earnings and potential, what Facebook's an advertising company. And if you take the sum of all advertising dollars spent globally, I mean, they're worth a multiple of that. So that means that there's no other advertising at all, only Facebook, and they're going to get 100%, of all the advertising money in the world. I mean, it's ridiculous. It's shocking how that people can come out with buy-side recommendations, with buy recommendations for a lot of these overvalued companies that are trading in the stratosphere.
Like Amazon. Amazon was overvalued a year and a half ago, and now it's up 100% in a year and a half.
But that's to me, that's how you recognize a bubble. You want to stand in front of a freight train? No, you don't. You want to step aside. I mean, we've done incredibly well because this year we're up. Our investors we've almost doubled our investors' money because, I saw some anomalies in the mining companies late last year that I thought made them incredibly attractive. And so I think that there are opportunities. No matter how grim things get, there are always opportunities. And what you need to do is spend your time doing research. Like, my book has 60 pages of endnotes, so it's not conspiracy theory. You can't dispute one number in that book. I defy anybody to dispute something in the book. It's the government's own data that's in there that I use as a basis for my conclusions, and I point you there. I say, don't take my word for it. Look it up yourself. Here's where you can go, and here's how to find it. So, you need to spend time or find an advisor that's willing to help you out, that you trust, to point you through it and figure it out and double check whatever anybody tells you. And if you can't figure it out yourself, then don't invest in it. If there's something you don't understand, then don't invest in it, period. If you don't understand 100% your investments, don't invest. That's the bottom line. Because you're gambling, you're not investing.
Yeah, and so many of these advisors, they give you the 1980s portfolio, and really they're not helpful. So hopefully people do their due diligence and try to find a real advisor who understands what's going on. Last question, Mitch. I know there are a lot of black swans out there that could send this thing toppling, but let me flip that question around. You've looked at this issue a long time now. Is there anything out there that you think could really correct this ship or make things right? Or is there a solution out there? I've recently read some things about debt jubilee. I know Tony Robbins in his book, Money, he was hopeful that perhaps technology, he acknowledged that we're in a serious crisis, but he was kind of optimistic that maybe technology could somehow, if they could just keep it going for another 10 years, perhaps technology could save us. Is there anything out there that you see that can make this ship right outside of just going through the worst, nastiest global depression in history?
I think that the chances of that happening are the same as me riding a unicorn across the White House lawn. So no, I don't think that's going to happen.
I'm not optimistic about you on a unicorn or across the White House.
Yeah, exactly. Right up to the front steps of the White House to have a scotch and play a round of golf with President Obama. So, I'm happy to play a round of golf with him. I'll play him even up anywhere he wants. But, going back to the reality of the situation, I don't think there's any chance of that happening. There are going to be sovereign defaults. There are going to be bankruptcies. I wrote an article in the Huffington Post, and the title of it was, "Capitalism Without Bankruptcy is Like Catholicism Without Hell." And what the Federal Reserve, the European Central Bank, the Bank of Japan, the Bank of England, Mark Carney, who's inflated the most grotesque property bubbles in the world in Vancouver and Canada, and then gone to the UK to inflate them there. They've taken away the bankruptcy option and created zombie companies that stay alive by 0% interest rates. So instead of bankruptcy, you have companies that will eventually go bankrupt, wasting more and more and more money. It's like bailout infinity. Bailouts, they shouldn't have bailouts. That's the natural market clearing mechanism is bankruptcy. So, that article that I wrote 2 years ago or 3 years ago, capitalism without bankruptcy is like Catholicism without hell, was the heads up warning that, look, this is moral hazard, this is wrong, and if you do it, all you're doing is creating a bigger problem down the road for future generations. So, you've got to be careful what you invest in. And, I would put more into cash right now and wait for a major pullback, and then selectively invest in stuff that is real. Not like Amazon that never made a profit.
Yeah.
Because these rock stars will fall from the stratosphere back to reality because there is gravity.
Sure. And the biggest tragedy just looking at the big picture, all these zombie companies, you got to wonder what great business, what great company, what great service, what great technology, where would this money go if it wasn't going to support a zombie company that's doomed? Instead, it's being misallocated. So it's certainly a tragic situation what they put in. There's all these jobs and different things and industries that are being supported. It's like supporting the horse and buggy industry or something. These bad businesses and bad banks should be cleared out.
But what they should be doing, you've got homelessness in America at an all-time high, and you've got child poverty at record highs, but nobody cares about that. They're putting $2 billion into ridiculous projects that can never work. So, people need to look. That's why you're getting civil unrest. It's not just because Black Lives Matter, one person gets shot, and, they are oppressing, there are racial tensions. They've never been higher. And when President Obama got elected, he said that he was going to end that. Now, it's worse than it ever was that I can remember in the history of my lifetime, and I was, born before 1960. So I think it's gotten a lot worse, and I don't see it getting better. And, when you push people down and they can't feed their families, you're going to get blowback. And this is part of the blowback when you try to eliminate the middle class.
Very scary. Mitch Feierstein, Planet Ponzi. Everyone, I'll have the links out for you as well as a transcript of the interview if you'd like to read through it again. Thank you so much for your time, sir.
Great. Thank you. I have been, throughout my 36 years in the markets on Wall Street and in the city of London, pretty timely with a lot of my market calls. Nobody makes money all the time. Sometimes you lose, sometimes you win. You just have to make sure that your winners offset your losers by a wide margin. Otherwise, you're out of the business pretty quickly. As far as recognition, I was fairly bullish up until about 2005, 2006, end of 2006. And at that point, I was working for one of the biggest hedge funds in Europe, managing a fairly large portion of the risk portfolio to hedge off any exposures that we may have. And
fully understand what's going on, but also you definitely have a charisma and to being able to teach people. So when I listen to your interviews, anybody can listen to you, anybody can read your book, and I think they'll definitely come away from that really feel like they've got it, the whole picture, whether they're into finance or not. So I'd like to start off with just a brief introduction of Planet Ponzi. And even to the point to when did you have this discovery or aha moment where, you're going along as an investor, hedge fund manager, and you're like, you know what, something is terribly off here.
Well, thanks for the praise. I don't know if I'm worth it, but fail like they did with the savings and loan institutions back in the 80s when I first started out in the markets. And 250 or 350 bankers went to jail. It's a similar type of scenario that you need with this. And I said, if you don't do that, I'm going to write a book and tell everybody the real story about the credit crisis and what happened. Because what's going to happen is if you just pretend, extend, pray, and delay, the next crash is going to be much worse than this crash. In fact, it's going to be worse than 1929, 2007, 2008 combined, and it's going to be a financial disaster bigger than the world has ever.
Greetings and thank you for joining us at futuremoneytrends.com. I have a special guest for us today. Many of you have probably seen his videos that are listening to this, his interviews, as well as even possibly read his book. Our guest today is an investor, banker, hedge fund manager, and author of Planet Ponzi. And we'll definitely make sure we have his website and links available. It's a site you're going to want to go to and spend a few hours, listen to his interviews, and certainly pick up his book. Mitch Feierstein, thank you so much for joining us, sir.
Yeah, thanks for having me here today.
Well, sir, your research is without a doubt, it's as in-depth as anybody can get and go into this.
I didn't like the way things were shaping up. I have a lot of interaction with the governments, and I don't think that they kind of get the picture. So we were pretty fortunate, with the hedging book, and we went short a lot of the major indices in Europe and in the United States. So we were probably pretty short when that happened, and I had cleared out a lot of the assets that I had owned in my book. So we were pretty successful during the beginning of that crisis because I saw it coming before it happened that time. But, I also suggested to the powers to be at that point that I had interface with that what's necessary to be done is instead of bailing these banks out, you need to let the banks